Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Wednesday it was a whipsaw price action after the market responded to economic data out of the US, which saw the dollar index, which measures the greenback strength against a basket of six major currencies, plummet from 103.50 to 102.77 and then rebounded and settled at 103.28. Triggering the market price action, the latest economic reports by the S&P Global indicated that the flash US PMI output index, which tracks the manufacturing and services sector, had increased to its highest level since June. This growth has been contributed to the gains in both of the services and manufacturing sectors. Looking ahead now, investors are eagerly awaiting the fourth quarter GDP figures out of the US on Thursday. And along with that, we get the PCE index, which is the Fed's preferred measure of inflation, on Friday. The US gross domestic product, or the GDP, is expected to be around 2% after a wild 4.9% in the previous data released. While the market looking to the PCE, which excludes the volatile food and energy components, is viewed monthly around 0.2% and 3% increase for the full year. These reports could provide valuable insight into the future policy decisions of the US Central Bank. Also, the US Federal Reserve is expected to keep rates unchanged at the January 30-31 meeting, but all eyes will be looking at the statement to see if there's any hints to a March rate cut. So looking at the Australian dollar price action and the technicals, although we've seen three challenges at that key level of 65.90 to 66.15, I'm not going to rule out another challenge there, and therefore a break at the midway point, because the MACD is improving as well. Could see a clearance of 66.15 and on towards 66.65 to 67.20.25 and then reassess from there. Any pullback finds support minor at 45 and the firm base, which is seen two stabs at 65.10.15. Besides the US data, all eyes will be looking to the ECB rate decision, which widely expects to keep rates on hold at 4.5%, but still anticipating a cut likely to come early this year. Looking at the technicals, well, the bullish divergence did kick in, and we did see the market stab at that top side level around 109.25 before slightly pulling back. We are above this trend line, and therefore does give further hope that we should eventually clear 109.25 and see a rally on, or a bull run, to the area of 110.45.55. With the bullish divergence kicking in, the MACD improving, does give some hope that this pattern should continue on its upward path and reach its destination. The dollar yen, well, the market was very whipsawed also overnight and took a stab at the downside to around 146.60 after crushing the level of 147.50. In light of the pattern, the market is trying to attempt to improve itself to the upside, but I feel will give opportunity for the bears to rush back in and eventually see the market slide on towards a retest of that key level of 146.60 and maybe even lower down to 145.80, and still not discounting potentially in the broader terms of 144. Sterling, well, the market remains strong and still a little bit hesitant as it looks back to the downside overnight and found a rejection close towards that 126.10.15 to around 126.5. I do like the way the market is performing and therefore should eventually reach the top side of 128.30 and reassess, as we could see an extension. The broader picture may actually even take us to 130 to 131, but as I say, that's broader and not quite there yet until the technicals from the dailies to the weeklies and even onto the monthlies strengthen up to give that call. To a break earlier this week of 2026, the market is reversed and now showing somewhat concerns to a bearish case in the short term, and therefore could bring the market sliding towards 2000 to around 2002. In light of the current pattern here, the market could give us opportunity, like previously when the market did drop close to that 2000 area and staged a rebound earlier this year. So I'm not going to get too negative. The RSI still holding relatively well, but the MACD's been somewhat negative for some time, which has probably been the case why the disappointing up test of reaching its objective around 2050. Nevertheless, the market still seems to be finding buying on dips, and therefore close to 2000 may once again do so like it did earlier this year, and eventually re-establish the top side through 22 and on to 2040 and reassess. The strength when it comes to oil continued and now very close to taking out the top side level of 75, 50, 75. Along with that, when you look at the technicals, we've got a married RSI to the MACD to support the bull case. The ADX supports the bull trend, and also from the inverted head and shoulders, and the trend holding, breaking through this top side could give further indication, not only beyond 75, 50, 75, but on towards $78 a barrel, and maybe with the broader sense, given from the measured move of this inverted head and shoulders, to 81 to 83. But that's a broader call. In the meantime, let's first of all see if we can break 75, 50, 75 to ignite the further demand and on towards $77 to $78 a barrel. Well, that's a wrap. Thank you very much for joining me. And as always, look out for the Inch Report. I hope you enjoyed a great start to the long weekend.